Welcome to App Talk with Upptic, where we dig into the nitty-gritty of how to grow apps and games. We speak with industry experts about specific strategies, tools, and tactics they use to find success, and we keep you up to date with emerging news and trends in the ever-changing games, marketing, and technology ecosystem. My name is Xander Agosta, Director of Marketing here at Upptic, and joining me today are my co-host,
Warren Woodward, co-founder of Upptic.
And our guest,
Shum Singh, Managing Director and founder of Agnitio Capital.
Welcome to the podcast, Shum. You've been on the short list to join us for quite some time, and so we're very glad that in our third season, we finally get you on board. Cool.
Oh, thanks so much for having me. Looking forward.
Awesome. Our first section is Industry Insights, where we do a deep dive on industry news, a few articles to cover this week, and Warren's experience gallivanting around New York. So we'll start with that.
Yeah, so I spent last week going to NFT NYC. It was my first time going to a like NFT or let's say like Web3 only major show like that. And if you can't tell by my voice, like one of my main takeaways was like a gnarly case of COVID, which I think about half of us there got. But no, it was an interesting scene. One thing that was really driven home for me being there was like there's a huge just like ocean between where different developers in the Web3 space are right now. So we're obviously largely focused on gaming, and it's like on one extreme end, you see like some truly amazing projects being built that I think are going to, some of the underlying ways that they're using Web3 tech and design for both gameplay and economy, I think are going to really change the industry. But on the other end, there's so much garbage. There's just so much like low quality product in that sector right now. And it's kind of painful as, our team and me in particular, like are huge advocates for what Web3 is going to bring to gaming. But at the same time, like need to acknowledge like both the bad actors and the low quality products in the space right now that are really dragging down the reputation and making it really harder to, bring in more people from the mainstream based on, what they see and the products that represent the space. So one thing I did want to dig in with you guys, though, is one of the big announcements this year is Solana Labs unveiled a Web3 mobile phone. So we pulled an article from CoinDesk for this, and I'll just read a couple of pull quotes. So they debuted this on stage at NFT NYC. So the Solana network is getting its own mobile phone called Saga. It's an Android handset, and it's being funded by the blockchain's key stakeholder, which is Solana Labs. So the upcoming device with specialty crypto wallet functions and software development kit for Web3 programs was announced Thursday at NFT NYC. It's going to cost about $1,000 and be available for delivery early next year. Solana Labs CEO Anatoly Yakovenko said, and this phone marks the biggest yet bet on mobile-focused growth for Solana. So it's going to feature Web3 DApp or decentralized app store, integrated Solana Pay to facilitate QR code and on-chain payments, mobile wallet adapter, and a seed vault that will store private keys deep within the recesses of the phone. And then the executives also contrasted the Solana phone with the App Store from Google and Apple, and saying they're basically not going to take a cut of sales. They said there's going to be no extractive fees. So this is not the first time someone's tried to build a Web3 phone. There's been some other failed attempts before, but arguably the market's more mature right now. And with Solana Labs directly funding this, I'm just curious, you guys both have in-depth knowledge of the mobile segment and Web3 segment. Is this going to be a thing? Are we looking at the next Fire phone? What do you guys think?
Yes.
I mean, look, Solana is clearly definitely one of the kind of clear dominant, or I could say pioneering players in the Web3 space. So I think if anybody's got a chance to make a Web3 mobile kind of functional phone a success, it's probably someone like Solana. So I think, at least from a conceptual resource perspective, they're certainly one of the players that could make it a success. But the issue is end user preferences, right? So I mean, there's been, and I'm going to go back, so you're going to see kind of a little bit how dated I am, but we're talking about pre-iPhone, and we're talking about the Nokia N-Gage platform, when that came out to be the sort of content-rich experience for end users, and that was supposed to be actually the app, phone device that would have games, content, etc., right there for Nokia users. And if you guys recall, Nokia was the dominant mobile phone manufacturer at that time. Of course, that was not a success. In fact, it was actually a pretty big failure, and ultimately led to Nokia's mobile phone business demise. Right. So even when you do have a large player and who kind of goes in with the best of intentions, I think a lot of this just relies on the UI experience, the price point to some degree, as well as just how fun and cool and how much of a status symbol does it become for early adopters and end users then.
Yeah, I largely agree. I love the chutzpah, and I'm very skeptical of the outcome. I think if you're in the Solana's position, I think you kind of have to make these type of giant bets, right? Because they are very clearly a leader in blockchain gaming, and they've sort of decided to diversify that across all different components. They're working on attribution in a way that no one else really is in the blockchain space, and I think this is just like a really, really smart bet for them. But I'm very, very skeptical of the outcome. I think, in the same way that Facebook tried it and Amazon tried it, and like just not going to pry the iPhone out of people's hands. And I don't see, because the value of the app, of the taxes are being currently burdened by the app developers and not the end users. I don't think there's a super compelling argument to the end user to make the switch, because they're not the ones feeling the pain of the tax, the Apple and Google tax. And for that reason, unless there is a really, really compelling use case that expands beyond enthusiasts, crypto enthusiasts, I don't really see how this becomes mainstream. Now, I think they still have to make this bet, and I think it's worth a try. But I unless something really changes that I'm not foreseeing, I don't understand how it replaces Apple as a predominant device, or even a substantial part of Android.
Yeah, that'll make sense. I mean, I think the one reason it's really important that they're at least taking this swing is in order to get some sort of meaningful mass adoption of Web3 gaming, there has to be ways that you can have these experiences on mobile. Yeah. And that's essentially non-existent right now. Like if you've ever tried to, use mobile wallets to interact with dApps and play Web3 games, it's, as miserable as the experience is today of doing that stuff on desktop, it's essentially a non-starter on mobile. So someone has to take that swing, and hopefully it works. Even if it doesn't, hopefully maybe there's at least a technical breakthrough if there's not adoption, and there's some precedent and some other players can build off of that, and provide a better on-ramp for mobile players to have experiences with Web3 games.
Or hopefully it scares Apple and Google enough to get their act together. Okay, let's move on to the next article entitled "The Ronin Bridge is Open." It's a Ronin newsletter, and so our favorite topic, Axie Infinity and Co. So we're going to do another covering their news. So a few quotes from the article. These are the highlights of their announcement.
And Xander, can you give for anyone who might be living in a cave, like what this is sort of like the sequel article to?
Sure, that's a good point. Good call out. We talk about this so much, I forget that people don't. So this is a sequel to Axie Infinity's major hack that happened several months ago now. They were hacked for $625 million in Ethereum and USDC coin. What this basically meant is that if you were living in the Axie Infinity ecosystem, you were unable to withdraw your tokens out of that ecosystem, which is a big issue if one of the core premises of your game is your ability to have tangible assets that you can withdraw from the ecosystem. So they were hacked, and they spent several months building up their infrastructure to counteract the hack. And this is the release of that. And we'll talk about what that means now. So the core of this is the bridge is open, and all Ethereum and USDC coins owned by Ronin network users are now fully backed one-to-one by ETH and USDC on Ethereum as promised. All users have been made whole. They've successfully conducted an internal audit and 2 external audits. They've designed there's a new bridge design, which includes a circuit breaker system as a contingency plan, which increases security of the bridge by halting large suspicious withdrawals. And sort of some of the mechanics of how this works is they separate withdrawals into tiers with escalating validator requirements based on dollar amounts, with the highest tier of 10 million plus USD requiring human review and is subject to a delay. There's new governor layers, which I won't really get into, but basically it's another layer of security. And there's also a default 50 million daily withdrawal, which can be reset by admins. So this is just another circuit breaker to help people from to stop the potential of just FUD pulling out huge amounts from the system. So, you know, I think all in all, they've done a very, very good job of managing the disaster, which was the hack. And I think they've done everything you can expect. The system is way more robust and secure. They've managed to, at personal expense and at equity expense of the company, make their users whole. So they're a difficult space. They're market leaders in like a very, very hard industry. But I think they've handled this about as professionally as can be done. So that's my thoughts.
Yeah, I mean, especially think about what else we've seen in the crypto space the last few months. So many hacks, you know, where people just like that, their funds, their tokens are just gone with no return. Like, they really found a way to, I mean, they made everybody whole here out of like a nightmare situation. And like, this was not easy. Like, we know the team, we know how much pain this caused them, but actually pulling this together, I think really, you know, as the set up top, the difference between like the good actors in the space and kind of like the dregs, and the Sky Mavis team is really differentiating themselves and saying like, yeah, okay, the hack happens to us. Like we are going to actually find a way to make it right, despite all odds. So like, mad respect for how they've done this. You know, I mean, if you had your money in Luna and UST, like they basically just tried to relaunch like the same thing. You know. And that's kind of the last thing I want to call out about the Axie team, kind of similar to what they discovered with their own economy. It's like when you're early, when you're a pioneer in something, you're going to make something and it's going to break. And then it's about how do you pivot and how do you learn from that? And we see in the way that they're rebuilding Ronin, like they're not just doing the same thing. Like they're actually, okay, we've built this way. We've seen what breaks. It sucked. now how do we build from here? How do we learn from this and evolve the space? And it's I hope that the way they're handling this gets as much coverage as, you know, the hack itself. It obviously won't, but you know, at least we can do our part in surfacing it.
No, I mean, yeah, and I think it's a great gesture, particularly to the users who've, you know, spent a lot of time. I think that it's a very philosophical and conscientious thing to do. I'm pretty sure a lot of companies in their position would not have chosen that route.
Agree.
For sure. And sometimes it's just purely motivated by financial reasons, or some of their investors saying, well, too bad, you know. It's just that simple of a decision. So I think that, you know, it's a real testament to the founders there and how they want to create a good reputation, thinking long term rather than short term and going for the money grab. So hopefully then that also, you know, trickles down to some of these more emerging players in the space to say, hey, well, you know, if you want to build a reputation, you want to build brand loyalty, you know, users will discern who they want to actually spend money with and not. So yeah, hopefully that sends a positive message to them. But again, it's certainly not getting as much recognition by various news sources out there. I mean, they just want to splash sensationalist,
right.
Newsworthy kind of articles out there.
Yeah, I mean, I think the one thing that also happened in this specific case is some of the big investors looked at Axie as sort of the marquee company really paving the space. And they realized if this goes down, potentially the whole space goes down. And so a lot of the big investors came in and were like, listen, we have to float this because we have so many other bets right in on this segment. And so I think that may be part of why they had the ability to fund this in a way that other companies wouldn't necessarily, because their stature as the leader. I'm not detracting from the leadership's desire to do it, but they have the capability to do it in a way that a lot of other companies wouldn't necessarily.
Right. It's about more than just Axie. It's about, can the space like show a path forward when things like this happen.
Mm-hmm.
Cool. Let's move on to the next article. So this is one from Mobile Dev Memo entitled "Playtika sells controlling stake: is mobile gaming undervalued?" A few quotes from the article. Joffre, I think that's how I pronounce it, a tech-focused buyout fund has agreed to acquire a controlling stake in mobile games publisher Playtika for $21 per share, representing a 46% premium on Playtika's close price yesterday. Playtika shares price fell precipitously after the company reported Q3 2021 earnings in October's and have trended downward ever since. This is largely due to pressure from ATT on UA and retargeting, which has been the mainstay of their social casino business. And the article sort of digs into quite a bit more about the specifics of Playtika, but I kind of wanted to call out the thesis of it is like Playtika is actually a case study. And the hypothetical question posed by this article is whether or not mobile games broadly are undervalued. And the author tends to think so. I have thoughts here, but I guess I want to open it up to the floor and say, what do you think? I guess, Shum, you're probably the expert here. Let's go to you first. What do you think about this article and the space broadly?
Yeah, I mean, it's look, you're going to get very staunch differing opinions on either side, right? To say, the bubbles burst, and because of these new sort of call it quasi-regulatory actions by Apple, and soon Google will follow suit as well, for sure. I think we all see that coming. It has had a pretty adverse impact, right, on UA in general, across the board, and that's why you've seen so many developers, irrespective of their size, move UA dollars from Apple over to Google, right? But all knowing in the kind of back of their heads, like, whoa, when is Google going to, kind of implement something similar? And, things are going to be very, very dire at that stage.
Right.
So I think, I think that there's, this is a kind of I think we're in this situation where, okay, the big gatekeepers make a move, it has a sort of intended effect, and the public company investors are just kind of playing catch up.
Right.
They're not really involved in the actual nitty gritty trenches of what's going on and how you can find other ways of creating, whether it's from a paid traffic perspective, or just generating better K factor and organic traffic. So the one thing that I think, being in the industry for a very long time, I've learned, and especially I think you guys have seen yourselves, is that a good UA expert manager, will find alternative ways to generate traffic. I mean, we all know this. That's why, marketers are paid as much as they are. I mean, because they can find really innovative, creative ways of generating, attention to different games, apps, what have you. So I do think that hasn't, of course, seeing those new avenues or channels hasn't arisen in a big, meaningful way yet, but I definitely know that will happen. We just don't know where that's going to happen or where that's going to come from, but I definitely see that. And so I think that this is largely a knee-jerk reaction to saying, oh my God, Apple and Google did this. Sorry, I'm going to move, away from games, and so I think companies, not just Playtika, if you look at even Swedish listed companies who've been pummeled, indiscriminately, for having exposure to not even just mobile games, I would say even PC and etc. So I think in general, yes, the market is undervalued because they're not actually factoring in the ability of their internal marketing capabilities, but also working with agencies like yourselves to find the next holy grail of channels to access new users and bring them in effectively at a cost of, in a very cost effective way. So yes, that's my opinion. I don't know when that's going to happen, right? When that actually materializes, but I certainly feel that way.
Yeah, I mean, one thing we've generally seen, I think, in the space is the bigger an organization is, obviously the less nimble that you are in making changes to how you operate your business. And that comes from everything, as you said, Shum, to like how you're managing and measuring UA, to just how you think about your finances for the business, for your investment in games and growing those games. And when I can say for our team personally here at Upptic, like when these changes hit in iOS, the first few months we were just beating our head against the wall, and it was rough, but we're a pretty small team. We can kind of zig and zag where we find openings, and we found some tactics that have been really effective for iOS, and built some of our own tooling around that, and mean, today for our company, we spend more on iOS and Android, and I think that's outside of the norm. But like the lanes are there, but since we're small, we can move and kind of make the calls on how we change our business strategy in a way that sometimes bigger companies can't. One thing I wanted to ask you guys about, so Eric Seufert in this article, he's referenced this concept a few times of the mobile winter, and this idea that for a roughly 2-year period, we're going to kind of be in these drags, the similar kind of performance, both for the games and for share price, obviously, but that it's like a pretty finite period of about 2 years as tactics evolve, as tech evolves, and a rebound after that. What do you guys think about that take of the mobile winter and that kind of timeline?
It's interesting that it happens to align pretty cleanly with what people are expecting for a short-term recession. So I wonder, how correlated those things are. I think you sort of touched on it at the top, which is that there's required innovation, and it's hard to put a time on the innovation. And Shum talked about that as well. I do think valuations, and Shum, you should answer this better than I can, but I do imagine valuations will start increasing once we see there's general market sentiment across all markets. As soon as sentiment starts to change, I expect to see mobile valuations change as well. But I guess, Shum, do you have thoughts there?
I mean, I mean, look, I definitely agree with that. I mean, but don't, we can't deny also, the macroeconomic, contributing factors right now.
Sure.
We're in an unprecedented inflationary environment. The Fed is playing catch up to try to contain it. And, that is having a really adverse impact across the board, pretty much in everywhere. So, you're talking about also couple that with the sort of the manner in which China handled, their zero kind of COVID policy, which is having all sorts of kind of supply chain issues across the board in every industry. And then on top of that, we have a war, going on in a very developer rich region. So
right.
When you add all of these kind of factors together, it really does point to kind of a if not a mild, but certainly some sort of a recession kind of upon us. And so again, whether that's linked to a mobile winter, I don't really know. I think we had an incredible bull run for 11, 12 years. I mean, so this was kind of expected. And I think it's actually a good thing as an economist. I mean, I think you can't have things consistently just going on an upward trend. You need to have a sort of rebalancing, a correction, and allow people to kind of just catch their breath, and then find new ways to innovate. I mean, that's usually, these are the times when you can actually sit there and reflect rather than just constantly be executing and just think, okay, well, hang on, how can I do this better? How can I actually evolve for the better? So I think this is actually a unique period for a lot of companies. I mean, I still don't think we're anywhere near the bottom. There's still way too much volatility in the market. I think that might happen by the end of this year, early next year, who knows? But I definitely think things are going to remain very volatile, well into the early part of next year.
Okay, so one of the ways I've been thinking about this, playing the space, and this is not investment advice, but it's what I've been doing personally, is I think the most interesting way to play the current downtrend is like looking at ecosystem plays like Unity and AppLovin. I think which are down 70 to 80% from their all-time high. Unity specifically, even though their tech is not as good as AppLovin in terms of targeting, and they had a big issue on their last quarter's earnings because they had some tech issues. I mean, in terms of the long-term macro trend, there's no company that's better positioned in games than Unity, because an increasing percentage of every game is being produced on Unity. And the thing is, most of their revenue still comes from their operate business, which is their added business, which we know is not operating on this, firing on the same caliber as companies like AppLovin. So even if we just throw that business away, the fact that they have 20 or 30% of their business coming from their tool side, which is how every majority of developers are developing games, and that's under monetizing, it just seems like the most insane long-term, betting against Unity seems like the most insane long-term trend. So I don't know. That's just one thought in terms of where I've been thinking about how you can play the space.
I mean, and look, that's a great point. I think, as I said, you had such an incredible bull run. All the short-term hedge funds that were out there, I mean, this was their day in the sunshine, right? I mean, they had been waiting and waiting and waiting. So, again, you've had so much kind of short selling across tech in general. And then you add in all these macroeconomic issues, the headwinds, you kind of develop this perfect storm for share prices going down
Right.
70-80%, right? So it's when you think about all the people that you probably know that are losing money on their investments, it's a zero-sum game. There's other people who are making money on that, right? So it's a lot of the kind of short-term, I should say the short selling investors.
Right. Okay. Do we want to move on to the next topic? I know we are.
Yeah, let's do it. And I know we'll come back to a lot of these topics in our main interview with Shum.
Yeah.
So next piece of news is something a little more optimistic for the spaces we focus on, which is this article from LinkedIn. Says another anticipated NFT game makes its way to the Epic Game Store. So this is for Blancos Block Party, which is developed by Mythical. Blancos Block Party is scheduled to release on the Epic Game Store. The game is currently coming to PC and Mac and will be available for download on a mainstream digital storefront. Blancos has already amassed more than 1 million players. The tally will surely increase as the game will be available to a huge mainstream audience via the Epic Game Store. Blancos Block Party is the second NFT game that is making its way to the Epic storefront. Previously, Gala Games announced that its Wild West theme NFT game Grit is making its way to Epic Store as well, as the first in the niche. So this to me is really interesting because I think that, we'll see if it pans out, but Epic has definitely said, we're planting a flag here. We are differentiating ourselves from Steam and from current policy for Apple and Google, and I say current because I think those will both clearly evolve, but I mean, their most direct competitor, Steam, has really drawn a hard line and said, essentially no to anything remotely blockchain gaming. And so now we're starting to see multiple publishers working, actually supported by Epic, not just sneaking their games through, which is some of what we see on these distribution platforms of just kind of clever ways that Web3 games are getting through approvals anyway. And I think it's a meaningful way for them to differentiate themselves, and it's pretty promising for the space. What are you guys' thoughts on this?
No, you go ahead.
Yeah, I mean, I wish I had the exact numbers on how Steam compares to Epic Games. I don't actually know that number. I know it's growing, and I think there's a really good reason. I think the Epic Store I thought was the biggest joke when it first launched, and they've just continually proved me wrong. I log on to Epic all the time just to take their free games, but then every once in a while I buy stuff, and it works. And now if they have a further differentiation, which is you get net new games, which you can't get anywhere else, and by the way, it has some of the most fervent fans in the world, which are NFT game players. I mean, I think that Epic is doing a really good job and has done a really good job as an operator for a really long time, and it doesn't seem like it's slowing down anytime soon. I wish it was public so we could buy their stock. That's my thought.
Yeah, I mean, I'd echo that, right? When I look at a lot of the Steam users, and I think that's, you focus on that demographic profile of kind of the average Steam user, and I hate to say average because of course you've got so many different kinds, but you're talking about a lot more purists. If you look at a lot of the titles that are on Steam, most of them are single player premium experiences, right? Which cater to a massive audience, right? We can't downplay that at all. But again, it's also a certain demographic profile. They have a certain style of gameplay as well, versus Epic, which tends to be, again, a little bit more, and I guess in my opinion, let's say Web3 savvy, NFT savvy, that also I think is going to be more likely to try new things, investigate new things, be an early adopter. So yeah, I mean, that's my view.
Yeah.
And we kind of see a parallel to this. We're starting to see moves from some of the third-party Android stores to be, also start to differentiate themselves with evolving policies around Web3 gaming faster than Google themselves are. So there's a lot more incentive to innovate when you are not the top dog. When you're the top dog, you're always operating from more of a defensive position. So I think this is some really healthy competition and differentiation.
So we'll pivot to our main topic, where we'll talk about gaming, M&A, and investing. We have a perfect person to talk about that topic. So let us jump right in. Will you tell us a bit about yourself, your background? What is Agnitio, and what do you do there?
Sure. So I'm Shum Singh, the original founder and MD of Agnitio Capital. We were founded in 2003. Full service investment bank, mainly focused on sell side mergers and acquisitions. And we've been exclusively focused on games for the vast majority of the time since we were founded. And really what we specialize in is really working with founder-owned, founder-led organizations, and really trying to help them think through when would be an appropriate time to pursue a particular strategic option, whether that's thinking about raising a very large growth equity round, maybe exiting the company, or ultimately not doing anything. So for us, it's less about the actual transaction. It's more about understanding I guess, the personal and professional objectives of the studios, of the companies we work with.
Yeah, and just chiming in quickly here, I've had the pleasure of knowing Shum for a while, and he's been a great, it's a mentor, benefactor to Upptic in our early days. A few of the studios that Shum has worked with were early partners of ours that we had some of the most successful outcomes for, companies like Candy Writer or Gen Joy. And I can say, in just like working with him through the years, he really knows all of the moving pieces of the industry. And I'd see one of your defining traits as well, Shum, and how you work is just a lot of patience and thoughtfulness and how you approach the space. And the companies you work with, not sort of rushing them to make M&A decisions, but grow their business in a healthy, sustainable way and do what's ultimately the right for the long term for them. And that's not something I see in a lot of key figures in the investing world. So I've always respected that about your team's methodology.
Thank you. That's very kind.
So I'd like you to walk us through the timeline of recent game finance and M&A. So we've touched on this at the top, but just sort of for the maybe someone who's not as deeply in the weeds, what are the different eras we've experienced? And we can go back as far as you want, but whatever you think is relevant. So talk about what have been the recent eras of game investment, and then where are we now as that relates to those eras?
Sure. So I mean, I think if you go back, I always think of kind of like a couple of key dates, right? So and in particular, I would say it's kind of pre-iPhone, so 2009, let's use that as kind of the main year when really the app stores took off. And kind of prior to that, we were really kind of in a console PC environment. And it was, and if you go even way further back, I'm talking late 90s, early 2000s, you really kind of had a small universe of publishers who would kind of dictate to the vast majority of other studios how the sort of publisher developer relationship functioned. And a lot of those smaller players were really at the mercy of what kind of deals they could be struck, whether it was a co-development deal, et cetera. And so it was great that you kind of had this real kind of eureka moment in 2009 when mobile appeared. And then if you think about it, the industry was growing, don't get me wrong, at a reasonable pace for both console and PC. But then 2009, you're talking about a market which was really a couple of 100 million max, going to now just mobile as a platform being over kind of 120 billion. And then so when you layer on console and PC, you're talking about an industry that's kind of getting close to, if not exceeding, 200 billion per year in kind of in just say gross receipts revenue. So I think in terms of M&A, and especially with the advent of mobile, you just started seeing a lot more of these mega billion-dollar mergers. And so in particular, the last, I'd say, kind of 3-4 deals you've seen, 3-4 years, you've seen a lot of these deals occur, particularly from, the likes of kind of Tencent acquiring Supercell, and then also even on the PC side with Riot, etc. Being the kind of, I'd say, the preeminent acquirer of those mega billion-dollar plus type transactions, but also then Microsoft as well, getting asserting themselves, with Minecraft back in the day, and then very, very recently, more with kind of Activision, etc., and then kind of Sony getting into the mix, right? So you're going to see, I think, more of the I think larger players where there is appetite. It's kind of, well, who's the next player up, right? So it's, there's been talk about EA, there's been talk about even a Ubisoft, potentially even Take-Two, although less likely since they just acquired Zynga. So I think you'll probably have some more of these mega deals without a doubt in my mind. But of course, given the current situation, things might be slowing down just due to sort of the market volatility.
Yeah, that makes sense. You sort of bookended this with two eras, one where publishers controlled everything, and then you had this explosion of competition. And now it sounds like we're in a era of reconsolidation. Is that an accurate read on this? And if so, what is the implication for the games industry writ large?
Yeah, I mean, I think the whole current M&A wave, trend, I think it sort of peaked around the end of 2020, early 21, when just, I mean, literally,
It was wild.
It was just every week you're like, oh my God, Glue, Glue just got acquired by EA. Oh wow, okay, Warner Brothers just sold off Playdemic. Oh wow, okay, like every week that was the kind of peak time frame, and things are kind of gradually slowing down, and that's driven by a number of factors. One, there's just not that many large transactions available, right? So that's one factor for sure. I think the second also is just the whole sort of macroeconomic environment. And I actually think it's a good time for the industry to M&A slowdown. Not great for my business, but it's actually a good time, because that's usually when that allows this sort of really grassroots movement of innovation. And there really hasn't been a whole lot when I think about it, when it comes to mobile free to play, especially. It's kind of just more of the same. And if you look at the top even 1,000 grossing apps, whether on Apple or Google, a lot of it by large players, and then even some of the smaller independents are actually not small anymore. They're actually mid-sized players themselves in their own right. So it's very, very hard for a small, even regardless of how nimble they are, maybe how even experienced they are at UA and marketing and publishing, but it's very, very hard to see sort of any kind of real movement in the charts. So it is actually a good time for a lot of innovation.
Shum, do you think that the investment world has matured a little bit as far as like their understanding of sustainable versus unsustainable growth, specifically in the mobile space? I mean, I think there is definitely an era where user acquisition can be wielded like a giant hammer to tell a growth story, but for less, not even less savvy, but less experienced investors, like the story on paper, if you're comparing to traditional businesses, may look like something other than what's kind of going on underneath. And do you think that A, do you agree that like there was a period of that, and B, do you see like the investment community in the gaming and mobile space getting a more refined understanding of healthy growth and sustainable growth versus unsustainable?
Yeah, so I mean, I think when you look at back to kind of early COVID days, right? So you had really a lot of, I would say, new entrants from public company investors getting into the game space, because they were kind of like, well, this is the perfect time to actually get exposure to this industry, because everybody's at home forced to play in game. What else can they do? So it was kind of this unique time period. Of course, now that we're kind of living in a post-COVID environment, at least certainly in most of the Western world, people's preferences and dwell time has kind of more normalized, right? And so, of course, I think that's obviously had an adjustment, but also then you layer on all the market volatility, and a lot of those first-time investors in games are kind of running for the hills, right, and wanting to kind of take their money and go invest it in more stable industries, which makes sense. Again, if you're not familiar with the kind of cycle of how long it takes to develop a game, publish it, and actually not really having any sort of guarantee of success, that can be a lot to swallow for an investor that wants to show to the people who've entrusted them with their money that they can produce predictable, reliable gains on a yearly basis. So I think there's that disconnect, right, where they have a certain objective on what they need to do in terms of achieving a certain return versus the life cycle of getting a game out there, which can be very lumpy. Irrespective of what platform you're developing for, whether it's console, PC, or mobile. So I think that sort of part still needs to be, that still requires some education.
Right. Yeah. So this is sort of like multiple components to feed into this, but we talked about, you have the macro trend, downtrend in the market, and then you also, that's causing maybe more tourists to flee. So
Yep.
How, with things slowing down, like what does that mean for M&A? Obviously there's less M&A, but does that mean we're at a point now where there's people who understand the market should be being more acquisitive? Like, is there an opening now for people who understand what's going on to take?
I do think so. I mean, definitely there's less buyers than sellers, for sure, at the moment. But I definitely do think that there's certainly some buyers who are, again, very well resourced, have plenty of financial muscle to weather the storm, and are thinking very opportunistically and are saying, hey, well, now could be a great time to acquire assets and companies at better valuations, and we'll take a longer term view. The other thing that I would also add is you've had the emergence of private equity and other forms of institutional capital that are taking pretty significant bets in the gaming space, that are creating their own sort of gaming portfolio, and kind of ecosystems internally, and who may or may not then take those gaming platforms, if you will, public in 3, 5, whenever the markets return, and they can sort of achieve some sort of a healthy valuation.
Yeah, that makes sense. So are there any specific categories or segments right now that you think are particularly ripe for this type of either acquisition, or have been somewhat sheltered from the downtrend? And that could be like game specific or like ecosystem. Sure. I don't, whatever.
Sure. Well, I definitely think that, again, and this is also, I guess, attributable to the war in Russia, Ukraine, where I think we mentioned, it's a very video game rich, obviously for a variety of reasons now, just the West can't have access to. And so that has had a knock-on effect to a lot of the larger publishers that, that have a certain cadence and delivery launch schedule of titles that are now continuing to, that backlog keeps getting bigger. And so a lot of work for hire or co-development studios, engineering heavy in particular, are becoming more and more attractive, particularly I would say those based in, Western Europe, North America, even other parts of the world, Southeast Asia, India, Latin America, etc. But that really do have good development capabilities, that can really get product out there and deliver on time. So I think that those companies, and particularly now in the kind of market we're in, are seeing a lot of interest, and not just from larger publishers, but also probably from some of the Web3 blockchain companies out there that need to build all that underlying infrastructure, right? That we talk about all the time, that isn't necessarily available today. There's only a few people really going out there trying to do that. So I think a lot of full stack development services organizations are in high demand right now, for sure.
That's a really good point, Shum. I didn't even identify the trend, but Xander, just thinking in the recent months, we've covered a number of stories of work for hire shops getting acquired, and definitely that pace has picked up the last few months.
And it totally makes sense when you think about what's needed in order to ship a game. Like, obviously, you need developers. It's like the core of the entire enterprise. So it makes a ton of sense.
Yeah, no, I mean, I think on top of that, look, whether you're a mobile, free to play, PC premium, etc. I mean, look, we can certainly say there's always appetite for well-run, solid, growing studios, despite market volatility. And people who, again, acquirers who do take a longer term view, they will really value companies that can see synergies. They'll still pay up for whether median or average value, multiples of companies are coming down or not.
That makes a lot of sense. Okay, well, if we do a little bit of forecasting, I know this is hard to do, but I am curious just your general opinions. Like, where do you foresee to the best of your ability, where do you foresee the games industry unfolding over the next, let's call it 2, 5, and 10 years? And like, what is the importance in terms of M&A for that process?
It's a big question.
It's a huge question. That's why it's our last one.
it's a big one. So I would say in the next 2 years, I think that's probably easier to answer. I think that,
sure.
And I think everybody would probably, at least to some degree, concur that there is going to be probably a lot less transactions occurring pretty much across the board. I think that's everybody's kind of forecasting that. I think what's interesting is the kind of 5 or 10 year view. So one thing that I do see, one kind of glimmer of hope, is I see a lot more early stage VCs right now looking at deploying capital into smaller, nimble teams, sometimes as much as just 5 guys who've come out of a great studio that want to make another top grossing title. And so there's a lot of capital out there that's supporting a lot of teams. And in mobile free to play, as an example, I think countries like Turkey, that have exploded, Israel, Finland still, and of course a whole bunch of other, kind of now even less well-known countries. So I think India is going to be massive, in the coming years. It's just starting to kind of emerge as a really interesting country. So I think that the prospects are pretty exciting, but I think won't really just start materializing. If I look at the cohorts of, studios that are getting funded now, a lot of those games probably won't come to market for the next 2, 3, 4 years. So I think in 5 years, you're going to just start seeing those vintages of companies getting funded, kind of around now. You're going to start to see just the beginning in 5 years of those really interesting games that are going to start performing really well. And then I think by 10 years, I'd say even before, I'd say there's an intermediate time frame. I think it's 7 years is when you're really going to see some really exciting stuff happening, and maybe some kind of are able to move some of the incumbent players around and give them a run for their money. On the PC side, I think, it's a very different landscape. I think, as long as people have a great idea out there, maybe even get a couple of Kickstarters going, they can always kind of, I think as long as there's real true passion and innovation, you'll just keep churning out cool studios, irrespective of where they are.
Okay. We have to end this, but I have a question. So in terms of you talk about incumbents being unseated, are there any specific hot takes you can predictions you can give us in terms of what you think actual incumbents are potentially in danger on the 10-year timeline?
I think I mean there's no one I can think of in particular right now. and I wouldn't probably want to name names.
Yeah, I know.
Too polite.
That would come back to bite me. But I think all incumbents right now should be afraid.
Okay.
They really should be afraid, because they're frankly not innovating, not supporting or investing. I mean, right now, okay, even if your A department is profitable and cash generative, to deploy that capital as a VC in up and coming studios, and it's such a small amount to invest, but to get knowledgeable about what it was like to be innovative, a long time before, because most of these incumbents were, very small 10, 15 years ago.
Right.
So I think, but they've just forgotten, the sort of the tools and the passion and just this sort of drive that they had back then, and they've become very corporate and professional.
Right. Okay. Well, as much as I'd like to continue talking about this, we have to move on to our last section, which is App of the Week. So, Warren, do you have an app this week?
I sure do. So amongst everything else that happened in the last week, we were fortunate enough to get to participate in a game launch for a #1 mobile game. So that is going to be my game this week. So this is a huge shout out to the team at Kabam, one of our partners, and really successful launch for Disney Mirrorverse. And I'm calling this out not just because it's something that we worked on, but because it's I think one of the first kind of really great new mobile games that I feel like it should not work this good for for a few reasons. So like for a little context on Disney Mirrorverse, it's an action RPG, I'd say, at its core, but with like a really heavy hero collector and like team build out mechanic. So it's gonna scratches a few different itches, from like the kind of a collectible itch, strategic and like loadout angle, and then sort of like a button mashy, twitchy gameplay in some of the combat as well. And you shouldn't see a game like with this many sort of like overlapping systems and a behemoth IP. Like this is basically like the, I wouldn't say everything, but it's a pretty exhaustive cast of characters from the Disney universe that you can mix and match on your teams. And a lot of times when there's like, big IP attached to an ambitious game, it all kind of gets bogged down. And this game did have a really long development cycle, but I think the results speak for themselves. Like it's held up 5-star ratings, #1 in RPG. It hit #1 in iOS, #2 in Android and overall games. And it's just fun. When I was stuck in bed with COVID, like I was having fun, like really getting to dive into the game more. And I just don't feel like we see a lot of breakthroughs like this of, to me, this is AAA free to play. And obviously we have a bias here, but I'd say go check it out. People have been loving it. Feedback's been like very, very positive in the community. And just want to congratulate the Kabam team on pulling off something great here.
Yeah, awesome one. Good one. The only reason I didn't play more of it is Diablo Immortal, so blame them. Cool. Shum, do you have an app this week?
I do. It's not anything new, but it's a game that I constantly come back and play. And so it was released a while ago, about 2-3 years ago, actually pre-COVID, by a Canadian developer called Capybara Games in Toronto. And the game's called Grindstone. It's actually an Apple Arcade game.
Yep.
And I came across it because I have kids and I love to play arcade games with them, because it's just a very safe, kind of curated environment for them. And, kind of literally within a few weeks of playing this with my daughter, I kind of realized very quickly, I was like, this actually game is probably more for me, because I'm not really, I mean, of course I understand and I like puzzle games, kind of match 3, but this one, with the sort of, I would say, kind of Nordic lore and kind of humor behind it as well, that's very distinct. It just kind of pulls you in, and they balanced it really well, so it keeps you coming back and trying to find a way to consistently progress and level up and etc. But yeah, the game design is really, really good. And I don't feel as though I'm constantly grinding all the time, even though that's ultimately what I'm doing, because I am actually deriving satisfaction from it. So yeah.
Yeah, it's a good game. I've played it. They do a really good job of it skins it in such a way it almost doesn't feel like a puzzle game. It almost feels like sort of like an action.
Yeah, like an RPG almost,
like a turn-based
right?
turn-based
Yeah.
RPG, but it is a
Yeah.
puzzle game in its core. And one of the other kind of cool callouts here is because Apple Arcade, there's none of the stupid microtransaction stuff in order to progress. So they don't negate it in the way that like a lot of the other similar games do. So that's score one for Apple in that case.
Yeah.
And Shum also doing us the service of reminding everyone that Apple Arcade exists, which we forget sometimes.
Okay, so
Xander, do you have a game this week?
I don't have a game this week. I do have an app this week. So this is an app that is a couple buddies of mine who I wanted to call out. They just launched an app called Side Pocket. Side Pocket is a tactical investing platform that is trying to compete with the likes of Robinhood for new ways for people to use digitally invest. So I'm not going to try and do the whole pitch, but basically what it is you set up an account with them, similar, and they use like Apex, so it's similar to what someone like Robinhood does. And so instead of choosing specific stocks, you choose side pockets, which are basically algorithmic strategies for how you want to invest. Then on the back end, they manage all the complexity of deploying those strategies in a systematic way, which gives you access to hedge fund level investment strategies for average consumers. Very early, you have to sign up for waitlist, but if this isn't the best idea I've heard in finance recently, I don't really know what it is. I'm very excited to see how this company goes. Friends of mine again, so I'm a little bit biased here, but definitely check out Side Pocket if you're curious and interested in that sort of thing. Cool. Well, we are at time. I know Shum's got to go, so let's just wrap up real quickly. Shum, thank you so much for joining us. Really excited to have you on after all this time. If someone wants to get a hold of you or learn more about Agnitio, where can they do that?
Well, firstly, thanks so much for having me, guys. Really enjoyed it. You can go to our website directly, www.agnitiocapital.com. You can see some more about what we've done, see some case studies, transactions, and there's a whole bunch of contact info available there.
Awesome. Warren, do you want to take us out?
Yeah, Shum, thanks so much for joining us. It was a pleasure to have you on, man. Always enjoy our conversations, and I think the timing is perfect with the current market conditions to get some sage-like wisdom from you for the listeners. So yeah, I mean, we talked a lot about things being more challenging for developers in times like this, and kind of less free cash floating around, which is all the more reason that we see the developers we talk to being a lot more methodical with how they are growing, how they are measuring things, and just kind of what is the ROI they're getting for each dollar that they throw in growing their games. And that's exactly where our team thrives. So here at Upptic, you've heard our spiel before probably, but we help game developers grow. We provide both the technology, automation tools, and the full service team to handle UA, creative, and analytics, and to get you through the bad times as well as the good for long-term sustainable, profitable growth is what we aim to support with all of our developers. So if you need help with that, feel free to reach out to us through our website. That's upptic.com. It's upptic.com.
Talk soon.